Cathie Wood, what kind of exposure, I mean, you know, tech, high-flying stuff, what kind of exposure did she have to China, and is she totally out now?
So she didn't have huge allocations to China, but for two of her funds, they had as much as 8 or 9% earlier this year in Chinese stocks. Now that's really been cut. One of them, she barely has any Chinese equity exposure. She's very involved in the innovation and the growth companies, and she's very much trimmed that.
So she's trimmed that, and I mean, I guess it's not really unheard of. I mean, Joe kind of alluded to this idea that a lot of these indices have been under pressure for a while here. You really go back to February, the last time we saw a real peak in some of these names here. But with regards to just the general sentiment here, I mean, are these bigger funds, are some of these bigger investors, are they looking at China and really saying, time is different and we really need to kind of reconsider being invested there?
Yeah, I mean, a lot of what I'm hearing from talking with fund managers is, the Chinese government has clearly increasingly cracked down. What's going to turn things around? And it's hard with so much uncertainty, I think, for anyone to say Chinese equities are going to start performing better for X reason.
Of course, Cathie Wood is highly renowned for her support of Elon Musk and everything to do with Tesla. Tesla has exposure to China. It's building a lot of its cars in Shanghai. They seem to remain committed to that at the moment, but people have been worried about the regulatory risk for that particular stock. At what point do we start worrying about US companies there? Or is that something that Cathie Wood's also thinking about?
It's a great question because everything's so interconnected. In terms of Cathie's exposure to Tesla, so far, she's very bullish on Tesla. But what I found striking was the fact that she was reducing these positions in Chinese equities. I mean, we know how faithful she is to what she believes in. The fact that she's trimming her bets in China, that's a pretty big signal. So,
I mean, so obviously, part of the reason why people keep getting burned on this trade is on a multiples basis. The stocks must look really cheap. And then you throw in the big narrative that China is still a relatively poor country and 1 billion consumers and cheap stocks and 1 billion consumers. It must go up long term. Is there anyone looking at it's like, yes, the headlines are absolutely awful now. No, we have not seen any sort of crackdown like this, but it's just too cheap to pass up?
Yeah, some people are saying that. And but it's kind of like you said, we keep seeing these dips and it just keeps dipping lower. So when people come in to try to buy the dip, the key aspect there is that the stock rebounds, and we haven't quite seen that yet. So I think that case is getting harder to make.
Right, and the key aspect too is that, I mean, we're still talking about the second largest economy out there that could potentially become the world's largest economy, a massive population here and a growing population with regards to its wealth. I mean, that's a big part of the reason why so many U.S. companies are attracted to it, and it's one of the reasons why we've seen these Chinese companies grow as fast as they will. At the end of the day, these fund managers, these companies, they're in it to make money. And if China provides an economy that allows them to do that, I would think that money flow is still going to continue.
Definitely. I mean, that being said, though, we are seeing lots of concerns in the U.S. about if we've reached peak economic growth. In China, we've already started to see some of those numbers turn over. Maybe they're past their peak in the rebound from COVID. So I think it's sort of an open question about, is it just the regulatory crackdown, or is it also, are we past peak economic growth?
It's sort of interesting, though, in terms of the flows that you do see going in, and whether or not we keep worrying about this is sector after sector. It's been the education sector, it's been big tech, but these are sectors, of course, that are in some way a threat potentially to the power of the state. Are there sectors that just aren't, or indeed, in fact, that the state's sort of embracing, like, well, the infrastructure of technology, chip making and the like?
Well, it's interesting. I was just looking at one of the ETFs. The ticker is KWEB, and it's actually seeing inflows right now. From analysts that I talked to, they said that that fund has a lot of large cap Chinese tech holdings. Tencent Holdings is its largest, and then Alibaba. So in the case of this crackdown, maybe those could hold up better, or at least that's what some investors are betting.